On Wall Street in New York, modern finance quietly concentrates enormous ownership.
Inside the American stock market, billions move through trades every single day.
Yet behind these trades, the same institutional investors appear again and again. Firms managing trillions now hold shares across much of corporate America.
This quiet concentration of ownership reshaped the structure of American markets. In modern markets, passive investing quietly directs trillions into American companies.
Asset managers like BlackRock and Vanguard now influence vast portions of corporate America.
Exchange-traded funds allow investors to buy entire sectors of the American economy.
Through these funds, the same investors appear repeatedly across major corporations.
This new structure quietly concentrates ownership across the American economy.
In today's markets, trillions from retirement funds flow through massive index funds. These funds automatically invest in the largest companies listed in the S&P 500. As passive investing expanded, ownership across American corporations quietly shifted.
The same asset managers now appear across entire sectors of the U.S. economy.
From technology to banking, these funds hold stakes across corporate America.
Economists call this pattern common ownership across competing American corporations.
The same funds may hold shares across several competing American airlines.
They may also appear among the largest shareholders of major U.S. banks. But owning shares does not mean directly running those companies.
Influence often appears through shareholder voting and corporate governance decisions.
Every year, thousands of shareholder votes shape leadership inside American corporations.
Large asset managers vote on directors, executive pay, and corporate governance. Because they hold large stakes, their votes carry significant influence.
Vigilance is the currency of the street. Ensuring investor confidence is our only priority.
Through ownership and voting, these funds influence decisions across the economy.
These analysts review company policies, leadership changes, and long-term strategies.
The process is known as investment stewardship across American markets. Our analysis indicates a strong buy signal for the Manhattan portfolio.
What are the inherent risks associated with the current market volatility?
This dialogue quietly shapes decisions across many major American corporations.
As passive investing expanded, institutional ownership across American companies grew rapidly.
By the 2020s, index funds held significant stakes in many major U.S. corporations.
This shift sparked debates among economists studying modern financial markets. Some researchers worry about concentration of ownership across entire industries.
Others argue these funds simply represent millions of ordinary American investors.
Much of the capital managed by these firms belongs to retirement savers.
Asset managers act as intermediaries, investing on behalf of millions of clients.
Still, their scale gives them enormous visibility across corporate America.
the same institutions often appear across technology, banking, and energy companies.
This interconnected ownership structure defines the architecture of modern markets.
Markets may appear chaotic, yet ownership patterns reveal deeper financial structures.
Behind daily volatility lies long-term capital managed by large institutions.
Over decades, asset managers became pillars of the American investment system.
The growth of index funds steadily expanded their presence across corporate America.
Today, their names appear repeatedly in shareholder filings of major corporations. Public filings often reveal the same asset managers across many American companies.
This network of ownership links companies throughout the American economy.
Understanding this structure reveals how modern markets truly operate.
Exchange-traded funds became one of the fastest-growing vehicles in finance.
Through these funds, investors gain instant exposure to the American economy.
As money flows into ETFs, the same companies receive steady investment. This process strengthens the largest companies within the American stock market.
Over time, passive investing reshaped how ownership spreads across corporate America.
As passive funds expanded, institutional ownership across the market increased steadily.
Large asset managers gradually became universal shareholders across many industries.
This transformation quietly reshaped the architecture of American capital markets.
Behind everyday trades lies a complex network of institutional ownership.
This acquisition will solidify our position in the Southeast Asian market.
It aligns perfectly with the long-term strategy we discussed with the board.
In modern finance, ownership often matters more than individual trades.
Large asset managers invest with horizons measured in decades.
Their portfolios connect thousands of companies across the American economy.
This network links industries from technology to banking and energy.
And it quietly anchors the structure of modern American markets.
Understanding ownership reveals the deeper structure behind modern financial markets.
The same investors often appear across hundreds of American corporations.
This repeated presence reflects the scale of modern asset management.
From Wall Street, these institutions influence decisions across the U.S. economy.
And their influence continues, shaping the future of American markets.
Modern markets may look decentralized, yet ownership remains surprisingly concentrated.
Across the S&P 500, the same asset managers repeatedly appear as shareholders.
This quiet pattern reveals the scale of modern asset management. Behind daily market headlines lies a powerful network of institutional capital.
In modern finance, ownership quietly shapes the future of corporate America.